on the downtick, and I've made myself some pretty straightforward profits, correct? Is that a nice way to make a living, guys? What do you think? Is that a nice way to make a profit? Sure. So there's the current trade as it stands at the moment. A little 3 lots just paid another $550 into the bank account. You wonder how we keep making our profits every day, guys? We just do the good stuff. We just do the basics right, don't we? We just do good trades over and over and over again, some of which scratch out, some of which make plus ones, and some of which catch a little bit of a bid or a little bit of an offer, and we make a little bit more money. We don't get too tied up in it. We don't get too biased about what we need to do. We just deal. We just go with the flow of the marketplace. We just feel the bids coming in. We sense where the ideas are. We've got some key levels to lean against. That's why simple little things like these little channels, they can be quite useful, because obviously they're not Bollingers. They're simply highlighting where the low is, so I can draw a level 2 there, right? So there's the level 2 there. So obviously when there's a massive divergence creeping in from the order flow, I can try and take advantage of that divergence in that phase, grab a little business and take a market bid. Take a market bid, right? And if it lines up with the idea of sentiment, if it lines up with the idea of value, if it lines up with the idea of everything, let's just take a look at it. We'll take a look at that actual trade, 1526. Did it line up with value divergence, yes or no? What do you think, Stuart? Did it line up with a value divergence on sentiment? Absolutely, right? So we got, not only did we get a value divergence on sentiment, did we get evidence of a level 2 buyer? Well, that's a level 2 buyer right there, correct? I mean, it's not much, it's only one tick. It's still a level 2 buyer, which means that that level must be a level 2 buyer if it goes in. So there was the trade. That's exactly the trade I just took. This is the one I've got a screenshot of right there. That is this trade here, right? 40.79, buy side trade, 40.79. There's my fill right there. Is that a good deal? What do you think? Is that the kind of trade you'd look at and say, I quite like that. That's a good bit of business right there. We've got a good solid uptick in terms of the tick divergence. I've got a good solid overall valuation in this market. I quite like the change of behavior in the background, which created that bullish order block that sent that price higher in the first place, yeah? So we've got the change of behavior there, if you want to call it a change of behavior. So we've got that which sent in this bullish order block for that higher drive. And all we did was wait for it to pull back into that area to do it all over again. Sentiment suggests we take some profits. Sentiment suggests we don't take all our profits, because obviously at this stage here there was a cap in this area here which turned into a change of behavior, of course. So obviously that's going to be a natural target for us to go after, that change of behavior there. And I don't really want to take much profit in this trade at the moment. I want to, obviously I've already taken profits. As soon as you see a big volume trade, you take profits every time, right? Right on the bottom of the hour. So as you can see, right on the bottom of the hour, a massive volume surge comes in, and you've got to take profits against that, because it's one of your profit take signals is a big surge in volume, correct? So at the bottom of the hour, a big surge in volume, bank some money. I wasn't wanting to take any profits. I didn't want to take any profits until we hit 87s. But because of the volume coming in, markets tell me otherwise. Take some profits. Take some profits. The market told me to take some. So it's a little bit skinny to where I wanted to get to, but I still used it to take some profits. And we're currently sitting on a trade at the moment. We're currently sitting with a trade. It's open. We've taken some profits. Worst case scenario, stops are at break even. Best case scenario, we're going to run back up to 88s. And if the sentiment holds up, we could be looking at a trade that's going to run 90 bid at the moment. Could run 90 bid. Does everybody agree with that sentiment? It could run 90 bid? Sure. Have we got any rotation? So when we're in this type of situation here, Now's the time to start going round some of the other elements. Are the rotations bullish? Is the advanced decline line agreeing with this overall shape of the markets? You can see the advanced decline line is turned up a little bit. It's not doing much. Are we getting bids on discretionaries against staples? Yes, we are. We're getting quite a strong bid on discretionaries against staples. So I quite like the macro on this. I quite like the macro shape on this. What about volatilities with the Dixie? It's okay. It's not brilliant. It's certainly more bullish than bearish at the moment. Certainly more bullish than bearish at the moment. And if we look at tech against utilities, it's okay, but it has dropped off since that profit take. That's probably what that profit take was all about. So a lot of that trade came in because of that divergence, one would imagine. So you were able to use the volume to find that divergence. So tech stocks not that good against utilities, and obviously that's quite disappointing. And if we look at the SPY against utilities, was it just tech or was it SPY against utilities? And you can see where the problem is, right? SPY utilities is pretty bad, right? So does that make sense where that volume was now? Does that volume make sense, Ab? Yeah. So you can start to see that the volume actually can be explained by some of these rotations. So your trading makes sense, doesn't it? So all of a sudden you realize why you took some profits, because obviously you might have seen the volume, not did anything, and then you started to investigate why, and by the time you reached why, you've actually given back all your money. That's not how you trade. When I see volume, I take profits. I don't ask questions. I hit the button. Understand? Because I don't have time to ask questions at that stage. Once I've taken some profits, now I can ask some questions. Because it's not going to make as big a difference to me if I take a little bit of time to come up with an answer. So when I get some profits, now I can start looking as to why that volume came in. And I'm able to then make a decision into this top line to take even more profits, because I saw the divergence coming in here, I saw the divergence coming in here, and that took you out before the drop happened, which is great news, because then you don't give back all of your profits on a hard-fought 5 points. Still level 2 liquidity at the bottom edge, for sure. So it doesn't matter whether the value or the volume's there, you still recognize it as level 2 liquidity, and you still have it marked, and you're still aware of its existence. Whether you trade it or not is a different question, but it's still there. It doesn't it doesn't just disappear because you don't like it. It's a statement of fact, guys. Level 2s are not opinions. They are factual pieces of information that are on your screens. Quite like the bond at the bottom edge, actually. I'd been taking a little interest in some bids into that bond at bottom prints. We'd seen quite a sizable turn in the inflation break-evens narrative. The bond was still bidding at 19s, 20s. It has subsequently gone up to 23. And I've been kind of watching to see if it had any more, because it came back down again and it retested. So I was a little bit surprised that we actually got the retest into that trade as well. So caught a little bit by surprise on that one. The dollar still looked pretty good, so I was still happy to be in it. But as I said, just perhaps a little bit surprised that we weren't instantly making cash on a deal. But I thought we had pretty much a definite given that we were going to make easy money on it. So this is the bond this morning. I thought this was almost a given that we were going to make money off of this pullback here. But we've kind of got a few ticks and scratched, a few ticks and scratched, a few ticks and scratched at the moment. We're not really getting away from this price. Well, that's what the line is at the moment that you can see, Miguel. That's your 5-year inflation break-evens that we've got on the screens. That suggests we should be ripping higher, right? We should be ripping higher on the 5-year inflation break-evens, which is why I wanted to buy bonds. Because in the absence of an offer on the yen, for example, and I don't see an offer on the yen, I see a small bid into the bottom edge here, I think we should be able to make money on this bond. Well, I mean, we're making money on this bond. We're just not making much money on this bond. So that's what the surprise is. It's not a surprise we're making money. It's a surprise we're not making that much money on it. So slightly disappointed. "20 minutes to finish off this week's classrooms, guys. 20 minutes to finish off the classrooms."